Yesterday, the stock market saw one of the biggest single-day drops in years, right after the announcement of new tariffs set to take effect this week. Let's talk about what happened, why it matters, and how it could affect real estate right here in the Tampa Bay area. Morning, guys. I'm Keith with Remax Champions. Now first, it's important to point out that this is an economic war, not one fought over land, but over advantages. In the United States, we spend a lot of money on foreign-made goods. That spending helps fuel other countries' economies and put food on their people's tables. We give them endless opportunities to market their products to our population, yet in return they heavily tax the American goods that we try to send back to them, our exports. Sounds fair, right? Now that's exactly the problem. These new tariffs are part of a broader strategy to rebalance decades of unfair trade. And while markets don't like change, this is a move to protect workers and our economy. So first off, a trade surplus is just when a country sells more to us than it buys from us. And a tariff, that's just a tax on imported goods, meant to make foreign products more expensive and give American-made alternatives a better shot. It's not about making it fair for everyone. It's about using our advantage as a large consumer state to our advantage. Now, why did the markets drop? Well, because investors don't like uncertainty. Tariffs disrupt trade routes, they shake up supply chains, and force companies to rework long-standing global strategies. That creates volatility. And when volatility hits, some investors shift their focus to long-term hard assets like gold and in some cases real estate. Now that's not a guarantee, but it's a common reaction during, times of economic shakeup. So what does that mean for your home here in Pasco County? Well, in the short term, buyer confidence may dip again, causing buyers to wait and see what happens. But also if that trend continues overall, the Federal Reserve could step in and lower interest rates to stimulate a sluggish economy. That'd be great news for mortgage rates and could create opportunities again for buyers that have been waiting. Now, this is going to directly affect new construction homes in the short term, and I could even see builders delaying new development phases if material costs or demand outlooks shift quickly. In the long term, if the U.S. succeeds in negotiating better trade deals and bringing manufacturing back, we could see more stable jobs, a stronger middle class, and growing housing demand, especially in areas benefiting from industrial growth. But realistically, that's a very positive long-term outlook, and it will not happen overnight. Now, I'm going to do my best to stay up to date on all the changes so that I can help you make the smart decisions. If you're thinking about buying, selling, or just want to be smart about your timing, let's talk. I also work with local investors who can provide fast cash offers if your home needs work. And don't forget, check the link in my bio to see if one of my 3 easy, flexible selling options works for you. Thanks again, guys.